Thank you so much. I am here with a special guest. It's the man who's responsible for everything that's going on here today, Roger Aguinaldo. He's the CEO and founder of the M&A Advisor. Roger, good to be back with you. It's been a year since we were here. What's changed in terms of the distressed investing environment?
Well, first of all, we got sun this year for you.
We are grateful for that.
What's changed is people's outlook on where things are going. About a year ago, almost nothing was going on. People were being introspective. They were looking internally. There weren't many transactions happening, or it was starting to come out. This year, at least people are starting to do things. Liquidity has come back to some of the distressed deals. Mm-hmm. Remember, about 18 months ago, starting at the end of 2008, beginning of 2009, no transactions were happening. And when that happens, even in the distressed market, you really can't affect any transactions. So that has changed mostly on the larger market. Middle market is still looking for a little bit more liquidity in the distressed transactions.
What are you finding as we listen to these panels that are being held today, that are some kind of the major themes also that you're hearing from folks? It seems to be, it's interesting because when the economy is doing well, it's not so good for those folks that are playing in the distressed area world.
Right. Well, M&A Advisor, as you may know, really tries to connect some of these professionals together to get some of these more stalwarts and experts together to talk about these general
And you
themes.
really have a who's who of everybody who's been involved in like the GM restructuring, Lehman Brothers, AIG. I mean, it really is a who's who.
Yes, who's who of people here. We've just heard an interesting talk during lunch from Roger Krause of Sun Capital about what they're doing with their operations and how they're turning things around and looking, as I said, introspectively, and how they're actually now adding on to some of their companies.
I mean, it's harder for these guys, isn't it? Because the environment is very different than it is maybe during the crisis.
Well, I mean, yes and no, right? It all depends. It really depends on the different industries. One of the themes coming out of here is there's certain different industries that are doing well and some industries that aren't doing well. If from an investor standpoint, it's very, very simple. If you think the industry is or has a good medium to long-term perspective in it, you're going to invest in it, whether it's currently in distress or the company is currently in distress or not. And if the industry does not have good prospects, for instance, print publishing, then you're not going to see people investing in that.
And that's what I'm thinking about for our audience, the Bloomberg viewer. I mean, they are interested in what areas might have some trouble. And you're right, media has come up as one area. Retail is also another area that people say there's still some questions about.
Yeah. Well, retail, you have some industry dynamics going on. People are going more online. They're more comfortable buying from their mobile devices now. So there's a technological change. But retailers, if they shift with the different technologies, as some are, some aren't. Borders couldn't shift with the different technologies. Mm-hmm. Barnes & Noble still up in question whether they can shift to the different technology, online or e-books.
Right.
Amazon is maybe trying to become a leader in that. So you're going to see some traditional retailers or traditional industry companies faced with the challenge of technology and the changes of that. And those that can change with the technologies are the ones that are going to get investments from a distressed perspective.
It makes sense. Those are with the viable businesses.
Right.
Roger, we're going to have to leave it there. Thank you so much.
Okay, thank you.
Roger Aguinaldo, everybody.